Welcome to the channel. Before we get into the stock we want to talk about in this video, we just want to give an update on the Kava Group stock. We have covered the stock recently. One analyst gives an update on the stock today. Andrew Charles, an analyst from TD Cowen, maintained the buy rating on Kava Group Inc. The associated price target was lowered to $120. Andrew Charles has issued a buy rating for Kava Group, citing a range of factors that underscore the company's growth potential. Despite the stock trading approximately 50% below its peak, the company's solid fundamentals make the current valuation increasingly appealing to investors. The revised price target of $120 reflects shifts within the market and the fast casual dining industry, while still indicating significant upside potential. Charles projects that Kava will expand to approximately 1,200 U.S. locations by 2033, capturing a substantial share of its total addressable market. Drawing comparisons with Chipotle, which has achieved similar market penetration and trades at a strong valuation multiple, Charles envisions Kava attaining a comparable market position. By applying a discounted rate to future earnings, he arrives at the $120 price target, which highlights the company's promising growth outlook and supports the buy recommendation. And go back to today's video, we dive deep into one of the most compelling players in the world of digital infrastructure, Vertiv Holdings. From powering critical technologies to driving innovation in fast-growing industries, Vertiv is shaping the future of connectivity and commerce. We'll uncover their game-changing solutions, explore their impressive financial performance, and reveal why Wall Street analysts are buzzing about this stock. If you're curious about the forces driving digital transformation and looking for insights into high-potential investments, you're in the right place. If you found this video helpful or learned something new, don't forget to give it a thumbs up. Your support means the world to us. And for more insights, updates, and exciting content, make sure to hit that subscribe button and turn on notifications so you never miss out. Friendly reminder, we are not financial advisor, so you always do your own due diligence. Let's unlock the story behind Vertiv and its promising trajectory. Vertiv Holdings Co, trading under ticker VRT, offers digital infrastructure technologies and deployable customized solutions to meet the specific business requirements and needs of a diverse group of customers. Its range of offerings includes alternate current and direct current power management products, switchgear and busbar products, thermal management products, integrated rack systems, modular solutions and management systems for monitoring and controlling digital infrastructure. Vertiv Holdings generates revenue through the sale of its products and services related to critical digital infrastructure. Key revenue streams include the sale of power management systems, thermal management solutions, IT management products and integrated solutions. Vertiv also earns from providing maintenance installation and optimization services for data centers and other digital infrastructure. The company often engages in long-term contracts with large enterprises, data center operators and telecom companies, which ensures a steady revenue flow. Partnerships with technology firms and involvement in large-scale infrastructure projects further contribute to Vertiv's earnings. Vertiv Holdings Financial. The company has shown strong financial performance and positive earnings outlook. The company has demonstrated a strong improvement in profitability, with a gross profit margin of 10.37% and a net profit margin of 8.75% in TTM. The TTM EBIT margin is particularly impressive at 24.14%, indicating efficient operational management. Revenue growth has been stable over recent years, showing a recovery from previous declines. The company has strengthened its financial position with a significant reduction in total debt, bringing the debt-to-equity ratio down to 0.08 in TTM. The equity ratio has improved to 26.65%, reflecting a solid capital structure. However, historical leverage was high, posing potential risk if not managed carefully. Vertiv Holdings has shown robust cash flow management with a strong free cash flow growth rate and an impressive operating cash flow to net income ratio of 2.66 in TTM. The free cash flow to net income ratio is also notable at 2.30, indicating healthy cash generation relative to profits. Company guidance. During Vertiv Holdings Co.'s fourth quarter and full year 2024 earnings conference call, several key metrics were highlighted. The company reported a significant 77% increase in adjusted earnings per share to 99 cents, with organic sales growth of 27% in the fourth quarter, including over 20% growth in the Americas and APAC, and over 30% in EMEA. The adjusted operating profit for the fourth quarter was $504 million, with a margin of 21.5%, an expansion of 380 basis points from the previous year. Adjusted free cash flow reached $362 million in the fourth quarter and exceeded $1.1 billion for the year, reducing net leverage to 1 times. For 2025, Vertiv anticipates sales of approximately $9.2 billion and adjusted EPS between $3.5 and $3.6, projecting continued strong performance driven by a robust backlog up 30% year-on-year and strong market demand, particularly in the Americas where trailing 12-month organic orders grew by 50%. Vertiv Holdings has announced a 50% increase in its annual dividend, raising it from 10 cents to 15 cents per share, reflecting the company's robust financial performance and cash flow. The quarterly dividend will start at 3.75 cents per share for Class A common stock, payable on December 19, 2024. Here's what top Wall Street analysts said about the stock. In a report released today, Christopher Snyder from Morgan Stanley maintained a buy rating on Vertiv Holdings with a price target of $140. The company's shares closed last Thursday at $73.21. Snyder covers the industrials sector, focusing on stocks such as Acuity Brands, Fastenal Company, and 3M. In addition to Morgan Stanley, Vertiv Holdings also received a buy from Bank of America Securities' Andrew Obin in a report issued today. Andrew Obin has given his buy rating due to a combination of factors that highlight the potential for Vertiv Holdings stock to appreciate. Despite a 36% decline in Vertiv Holdings shares year-to-date, compared to a 10% drop in the S&P 500 index, Obin anticipates that order growth will be a key driver for the stock, with a forecast of $2.4 billion in orders. The data center market fundamentals remain robust with a record low vacancy rate of 1.9% in the U.S., even as rents have increased by 13% year-over-year. However, the concerns surrounding Microsoft's data center capital expenditures are seen as temporary, with Microsoft planning significant spending in the coming fiscal year. The capital expenditure by major cloud service providers is expected to rise significantly, which bodes well for Vertiv Holdings. Furthermore, the impact of U.S. tariffs on margins is considered manageable, and there is a potential foreign exchange tailwind. These factors, combined with a price objective of $135, support the buy rating for Vertiv Holdings. On April 16, 2025, RBC Capital Analyst also maintained a buy rating on the stock with a $108 price target. For our price target is $116.73 with a strong buy rating. It's 70% upside for the 12 months forecast according to our sources. Look at PE ratio is really high. 86.25 means that investors are willing to pay $86.25 for every $1 of earnings the company generates. Whether this is good or bad depends on several factors including the industry average, the company's growth prospects, and market conditions. Generally, a higher PE ratio suggests that investors expect higher growth in the future, while a lower PE ratio might indicate that the stock is undervalued or that the company is facing challenges. On the margins, gross margin is 36.62% with operating margin of 17.07% and net profit margin of 6.19%. Overall, these margins suggest the company is performing well, especially at the gross and operating levels. The net profit margin could be evaluated further in the context of its industry peers to determine if it's competitive. To sum up, Vertiv Holdings has established itself as a leading provider of digital infrastructure technologies, offering a comprehensive range of products and services that support critical operations across industries. The company demonstrates consistent revenue growth, robust profitability, and effective cash flow management, positioning it for continued success. With impressive expansion plans, strong market demand, and positive endorsements from top Wall Street analysts, Vertiv shows significant potential for stock appreciation. The growth projections combined with sound financial performance and attractive margins make Vertiv Holdings an exciting prospect for investors looking to capitalize on the booming digital infrastructure market. As always, thorough research and informed decision-making are key when considering investment opportunities. Thanks for tuning in. If you found this video helpful or learned something new, don't forget to give it a thumbs up. Your support means the world to us. And for more insights, updates, and exciting content, make sure to hit that subscribe button and turn on notifications so you never miss out. Share your thoughts in the comments below. We'd love to hear from you. Thanks again and see you in the next video.